was down to about $784,000 before I decided to refinance to save money. But 12 months from now, I'm going to owe the exact same amount of money on this house as I did yesterday before I refinanced.
Yeah.
And so that just goes to say that refinancing is also a scam.
Ladies and gentlemen, welcome back. So apparently people are being screwed over by refinancing here in 2025. It's shocking, right? So let's take a look and see what's going on.
So my husband and I refinanced our mortgage today because interest rates dropped and it was enough to save us $300 a month. However, I have in my hands the amortization schedule, which is how long it's going to take us to pay off said mortgage and how much would go towards principal and interest each month. And I want to use this to talk to you about why home buying in America is an absolute fucking scam and why this will be the last house we ever buy in this country. So just really quick facts, it's a standard 30-year mortgage. It's a VA loan, so I didn't have to put anything down in order to refinance, and I don't have to pay any mortgage insurance, which is what normal people have to pay when they don't put 20% down. But because we didn't put anything down, I went from owing $784,000 on my home back up to $795,000.
Okay, so real quick, she and her husband refinanced. Just to have context here, they owed $784 on the previous balance. Now it's gone up to $795 on this new home loan that is refinanced, 30-year fixed. VA at a lower interest rate. So in one sense, you might think it's a good thing because you're getting a lower interest rate. When you look at the facts, you realize that oftentimes, especially right now in 2025, refinancing is not going to help you very much. And in this case, already we can see it's set them back. But let's continue.
But my original interest rate on this house was 6.2%, and now it is 5.6%. We are planning on selling this house when my husband retires in 4 years and exiting the U.S. So, of course, I was interested to see what will I owe at that time in 2030. And at that point in 2030, we will owe just under $750,000. So I will only have paid off $50,000 worth of my mortgage in the next 4 years. But the math ain't mathin' because my payment is $5,700 a month.
$5,700, and they saved $300. So it was $6,000 a month previously, which is absurd. Absolutely absurd for any payment. This house must be huge. This house must be new, hopefully they're getting what they're paying for. But again, we've been in a high interest rate environment, so this is kind of the normal, unfortunately.
$5,700 a month times 50 payments is $285,000. And if you look at the schedule, it tells you, oh yeah, you're financing $795,000, but if you kept this interest rate over 30 years, you're actually going to end up paying $1.6 million.
Yep.
But the biggest scam of all is how much interest they charge you the first year you own the house. And I have other videos on this. I've talked about it. Again, I put myself in this situation. It is what it is. The point is I'm calling out the banks because they are f***ing ridiculous. First of all, when you come to closing, we bought $7,000 to closing. They make you pay $3,500 in upfront interest. So not only are your first 12 payments horrendously just put towards interest, but then you have to bring extra money to closing just to pay interest up front. Now I will say this, our principal and interest amount is $4,500 and it's our taxes that are additional $1,000, which is how we get to that $5,700 number. Our first payment is 11/1 coming up, right? $4,500 payment, only $849 of that goes to principal.
Oh.
And every month after that, only $4 extra of your payments goes towards principal.
Man.
My very first payment, $4,500 payment, $3,700 of that goes to interest. So even though over the next 12 months, I'm going to make roughly $54,000 in principal and interest payments, not including taxes, according to the amortization schedule, I won't even have paid down the mortgage a total of $10,000. And not for nothing. Again, remember, I was down to about $784,000 before I decided to refinance to save money. But 12 months from now, I'm going to owe the exact same amount of money on this house as I did yesterday before I refinanced.
Yeah.
And so that just goes to say that refinancing is also a scam. Because you claim that you're saving me money, but in the end, you always gonna get your money back. And while I get to cash out my escrow account from my previous mortgage and I don't have to pay my mortgage in all of October, and you're handing me $14,000, you're literally just framing it like you're paying me in girl math. But in reality, I'm spending way more money with the bank.
This is, I think, the point of this video. Banks are businesses, right? We have to understand that banks are businesses. Therefore, they are not going to have our best interests as their customers in mind because, oftentimes they're just trying to make a profit. That is their sole purpose, right? I mean, that is the sole purpose of any business. You have to make revenue, you have to make profit on top of that revenue in order to survive. And banks, particularly banks that give out loans for homes or cars or whatever, in this environment are going to push you to make sure that one, that you can afford the payment, but they're going to make sure that you can afford the highest payment possible. This couple can't afford a $6,000 payment, and they decided to save $300 with a refinance and get a $5,700 payment. The bank is overjoyed, right? Because they were paying less interest before on the previous loan. Now they're paying more interest because they've reset the mortgage back to a new 30-year fixed VA loan because it's been refinanced, and they're paying all that interest up front. Now, if you have bought a home, you understand amortization schedules, you understand that how all this works is you pay the most amount of interest up front, and as you make the payments towards the end of the loan period, that's when you're making the most payments on the actual principal balance. That's why people suggest, if you're making more money, if you have, let's say your mortgage payment's $2,000 a month and you have an extra $1,000 in your income that you want to put towards the principal of your home loan, they suggest you do it because then you're going to be breaking down that interest payment even faster because your principal is going to be lower, and you can direct payments directly to the principal after you actually paid the loan every month. That's the smart way to do it, right? That's the way I would suggest people to do it. Now, of course, those opportunities are few and far in between, and you have to make a lot of money in order to capitalize on that opportunity. In this particular case, it looks like a lender saw that they had good credit, they had good income, and probably sold them more house. And I would say the realtors sold them more house than they probably should have gotten, probably are able to afford. And somehow, I don't know if the bank reached out to them or a loan officer reached out to them, someone convinced them to refinance because the rates did drop. In this case, I think she said it was 6.2 and now it's 5.6. And so 0.6% of a difference, $300 a month in my mind. It's not nothing, of course, but is it worth resetting the whole mortgage and then just having to pay more interest up front to the bank? I don't think so. Personally, I don't think so. And it just goes to show you have to have people in your life that are complete third party, whether it's family or friends, that you're going to asking for advice on these types of huge financial decisions. Because when it comes to these things, when it comes to refinances and things like that, like cash out refinances, people will pitch you, the salespeople will pitch you like you can get your money back and be able to use your money. However, they refuse to tell you until you're at the signing table to close the deal that your payment's going to increase because interest rates can reflect what the current market rate is, which interest rates are very high and elevated. So your payment's going to go up, but you do get money back in the bank. So in one sense, it's like, oh, cool, I get my equity back. But in another sense, it's like, oh, wait, like I have to pay an extra $500 a month in that case. But in this particular case, her payment went down. It still was not the best decision. I know she probably knows it's not the best decision because you went from owing less on the house to now owing more on the house because of the refinance. And it's just not a great situation to be in. My recommendation would not to be in a house this expensive to sell. Obviously, they make good income because it's just not worth being house poor at this point in time in 2025. But nevertheless, I appreciate this creator here, Femme Frank Tank. I believe her name was Alexis on TikTok. Go give her a follow. She is sharing the story. And obviously appreciate people that are willing to do this because we've all made mistakes, right? I've made huge mistakes, and I know everyone does. And so it's good to kind of talk these things over. And in this next video, we are entering into the season of the year where obviously we talked about refinances in this first part of the video, but this next part of the video, we're entering into the season of the year where people's home payments are going to increase because it's around that tax season, at least here in the South. And taxes get reassessed. And when taxes get reassessed, typically there are home appraisals that are done, which typically means that your home insurance may go up if you're in the South, at least, because they claim all these natural disasters are causing home insurance to rise. And not just home insurance, car insurance as well. But this video, I think, greatly summarizes how young homeowners feel, and maybe even old homeowners feel around this time of year, when everything that we're told about fixed mortgages and fixed payments kind of goes out the window. So let's take a look.
I used to think that if I got a mortgage, it would stay the same forever. So when I bought a house, I had this mindset like, okay, cool. The mortgage is $2,400 a month, and that's just what it'll be for the next 30 years. I'll get raises, but that number stays the same. Except here's the thing, it doesn't. Even if your interest rate is fixed, your mortgage still goes up. Sometimes a lot because of escrow. Property taxes go up, your home insurance goes up, your escrow account comes up short, so your lender just increases your monthly payment to cover that. And it's not like it's optional, they just do it. So yeah, technically your loan is fixed or your rate is fixed, but your payment isn't. Nobody really explains that part until it hits your bank account. Has your mortgage ever jumped out of nowhere? Mine went up a ton this year. Comment if this has happened to you.
Shout out to Profit Pulse Wealth on TikTok. Andrew is his name. Give him a follow. What the purpose of this video, I think, kind of highlights is just the fact that young homebuyers are still, and even old homebuyers are still very much financially illiterate when it comes to mortgages, when it comes to these different financial tools and services that banks give to us in order to buy houses. And we have to, as just regular citizens, really up our game, really up our understanding of these things, because particularly in situations like we've been in the past, if home prices all go up en masse, property taxes will increase, home insurance will increase, and so your fixed mortgage payment is not actually fixed. Like you said, your escrow will increase. And if you don't have an escrow account and you're just putting the money away, and let's say you kind of get careless and you don't put as much away as you should, and at the end of the year, the bank is asking for, $1,000 or $2,000 more. In some cases, it's even more than that. You're going to be screwed. And these are not payments that you can avoid. You have to pay these, otherwise you're going to lose your house. And so it's one of those things where we have to just increase financial awareness, financial literacy in this particular place when it comes to home mortgages. Because, this comment right here pretty much explains my situation, which was, it was wild. My first year mortgage was $1,800, and I was like, cool, that works. 3 years later, it's closer to $2,600. So my situation is not as bad as that. Thankfully, my original payment the first year was $1,500, and over the past 4 years, it's increased to around $1,900. Now, there's ways to kind of work around this. Obviously, the state and the city you live in plays a huge role in this, whether or not those states are limiting property taxes, and also making sure that you're getting the best quote with your home insurance is huge. Like, I would very much encourage you, shop around with home insurances and just make sure that you're getting the best quote. And also make sure that you're not underinsured as well, because a lot of people are underinsured just to make the payment less. But if something happens, that's going to be another position you're going to be in where you're going to be screwed, because people don't understand this. If your house gets destroyed, you still have to make payments on, in the mortgage. You think you get excused, right? But that's not how that works. That's why you have insurance, to be able to rebuild and pay the mortgage if possible, depending on whatever happens to the house. And so thank you so much for watching this video. I hope you enjoyed. If you've experienced something similar to this, if your home payment's gone up, if you've been tempted by a refinance, or if you've even done a refinance and you realized it was not the right decision, please leave a comment, tell your story. I'd love to engage in civil conversation with y'all. Always a pleasure to be with you guys. Please like, comment, and subscribe. We are going to continue to release videos weekly here on this channel. And so if you enjoyed this one, please feel free to click on the one floating next to my head here. And until next time, be safe, and I'll see you in the next video. Peace.